Good morning, everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday, April 11th. It's what time is it? It's 10 a.m. Mountain Standard Time. Our markets have been open, 2.5 hours so far. If we take a quick peek at our markets and where they've been, I'm going to go with the SPX. That's probably a better representation of our market as a whole. As we look at our markets, down slightly, really pretty flat. In fact, for the last week and a half, slightly up, but a pretty, let's just go 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. It's been pretty flat between 28.50 and 28.85. You could even make it for the last 8 trading days between 28.68 and 28.85. A 13-point range, pretty not moving one direction or the other. So if I could ask you, what's happening with our markets right now? If we start off, what's happening with our markets right now? I'm going to tell you, I think it's pretty obvious, but you tell me what you think. What's happening with our markets right now? Okay, sideways. Yes, that is true. But give me reasons why. The reasons why I do this is so you can look into my head, so you can see how I think. I'm looking for reasons why. Don't tell me the market's moving sideways. I just showed you that. Let's move this on to the next level. Let's help you be able to do this on your own. Why is the market moving sideways? Find answers to your questions. Stumped you, didn't I? Okay, well, there you go. Bingo. There's a couple good answers here. Tax season, which typically equals some selling to pay for taxes. China deal, not yet complete. Bill, you nailed it. Global, I'm going to stick this in here. Global growth concerns. We have global lack of growth, political turmoil and distrust. So you could say the Brexit that was pushed to October 31st, 2019. So that's kind of been resolved. I like all of these. There could be one last reason, which I think is probably the most important, that it is the quiet season before earnings, which means you have no selling or buying of stocks. You've got no comments. And that quiet season before earnings it's detrimental to supporting stock prices. We don't like uncertainty, right? So when there's uncertainty because nothing can be said, or you have to trust an analyst, right? An analyst, you run into time periods where things are uncertain, when they're flat. When you're looking at a time period where a stock can move 15, 25% one way or the other, there's uncertainty. And it's kind of funny because I've already gotten about a half a dozen questions on Keith Bybee's trade findings and adjustments on Tuesday. And I'll be honest with you, my thought process is, okay, talk Tuesday, you had Wednesday and 2.5 hours today. What is the issue? You've had a day and 2.5 hours of trading, and already you're doubting whether that would have been a position you should have been in. And I'm going to be 100% honest with you for those that are here. If you've been in a day and 2.5 hours and you're doubting the position you might have put on yesterday, you're not doing enough work to own your trades. You're following someone and looking for a scapegoat to blame for a very poor trading decision that you made. I got a chuckle because as I pull up what was brought out to you, you had an option for a May 21st $16 to $20 strike bull call. If I take a quick look and we bring up Disney on a chart, it's awfully darn flat, just coming off of an overbought category, but I think it can stay overbought. I look at the chart for yesterday and today and think you should be fine. For a trade out to May 24th, there's nothing that's worrying me a day and 2.5 hours afterwards that I feel I need to be talking to someone about a trade I might have placed a day and 2.5 hours ago. I'm going to make this brutally honest and clear for you. If there were people here that have had a problem with a trade that was suggested Tuesday evening and you placed it sometimes Wednesday and you're worried about it today, you should not be trading in the market. You need an education and you have no idea how to trade. That is brutally honest. That might be hurtful for some. Save your damn money and get out of the market. You don't belong in today's stock market. A volatility or a VIX for someone that is worried about a trade they might have placed sometime yesterday. With a VIX at 13, you need a professional trader to be trading your money. That should never be giving you that amount of heartburn that you have an issue or a worry. 2 comments just came in. You need to give the trade time to ripen after knowing the equity. The second one I think is even better. What kind of risk tolerance and time horizon do these people have? I don't know to either question, but I agree. You need to give time for the trade to ripen. I think that's excellently put. And you sure better know the equity. And number 2, yeah, apparently the time horizon was 24 hours, which means please talk to Hurley Investments and one of my representatives so that we can professionally trade your money and so that you don't have the heartburn or the worry over a single trade that might have been placed Wednesday sometime or Wednesday morning. You're still in great shape. And so come back to knowing the equity. What was offered to you? A bull call, a cost basis of $2, a reward of $2. That is a 1-for-1 risk to reward. Not bad. You'd like maybe 1.5 to maybe 2, but in all honesty, a 1-to-1 risk to reward, no brainer. On 10 contracts, you're risking $2,000. No brainer. Break even at 117.92. No brainer. Easy to adjust if it goes wrong, easy to adjust if it goes the wrong way. No brainer. But looking at a chart, you are still bullish. There is no indicator that indicates that you need to adjust. You're fine. Give your trade time to mature or to ripen, as it was quoted to us. Have a time horizon of more than 24 hours. If you're a day trader, you should not be in the market. And you certainly, if you're a day trader, should not be following Hurley investments or any option strategies. In all honesty, you need to be buying and selling the equities on short-term, ridiculous trade patterns that have no consistency or no expectation to truly follow through. Kind of brutal today, so I hope some people are taking this to heart. If you're getting pissed off, sorry. Good luck to you. January 2020. 7 months and like 21 days away. A leap long call for $7. Lots of time for profit potential. No reason to be worried about a one-day movement. No reason to be worried about a 1 month movement. The adjustment for leap long calls, pretty simple, pretty easy. Adjustment, dollar cost average, or add a long put with technical crossovers, crying out loud, and time is your friend. Lots of time. Adjustment here, roll the 120 short call down to the 115. If it breaks the 115 price, it's kind of that simple. And probably the least attractive alternative, even though the probabilities show that it's a great trade, the least attractive opportunity here, a May monthly 110, 105 bull put, gives you a 66-cent credit. But boy, risk to reward, you make 66 cents for $4.34 a risk. That's awful. 434 divided by 66. You have one reward for 6.5 risks. And the biggest problem with any of these trades is what? What's the biggest problem with any of these trades? Let me take that back. Let me state that a different way. What is the biggest risk for any of these trades? Anybody? Comes back to knowing your stocks, right? What's the biggest risk for any of these trades? There you go. Bingo. earnings on 05/08/2019, and I'm not sure if that's confirmed or not, to be honest with you. What is the biggest profitable event for the trade? Anyone know? It was the Investors Day, and that's the movie Endgame Part 2. Already the most pre-sales ever for a movie. It might be the first movie to make $1 billion worldwide on the first weekend release. $1 billion worldwide on the first weekend release. And I'm pretty sure it's going to be released April 25th, here in a couple of weeks, right? Let me make a couple helping you understand the trades. Option 1, pretty simple. You don't have to stay in the trade for a full trade for maximum profit until May 24th. And yeah, let's just put it that way. You don't need 100% return, especially if you can get 50% of it next week. Why stay in a trade 7 weeks longer when in the first week you can get out with a 50% profit? Is it worth risking a 50% profit to make another 50% over the next 7 weeks when you do it in a week? I hate annualizing trades. I think that is the biggest bunch of garbage, and I'm really going off today, aren't I? You want to hear something that's really foolish? Some education that's talking about annualized trade returns in a freaking paper trading account where they don't have the guts to trade in real life. But understanding the principle of annualized returns, if you can make half your potential profit in a week and annualize that and do that maybe every 2 to 3 weeks instead of staying in for another half of the potential profit, risking that profit, staying in for another 7 weeks into the future, you've missed the idea of taking a profit and you never go broke from taking a profit. Come on, people, make it simple and easy on yourselves, right? Option 2, guess what? You don't have to stay in the trade until January 2020. If we get a good $5, $6 move in the next 2 weeks because of endgame, you don't even have to stay in it till earnings. Just because you can stay in it 9 months and 21 days or whatever it is, 9 months and 9 days, doesn't mean you have to. Doesn't mean you have to double your profit. Doesn't mean you have to wait till it's at $14. You get up a buck, you book a profit. What's $1? $1 divided by 7, 14.28% return. Bingo. Option C. I guess they're A, B, and C, huh? Option C. You don't need the full credit with a 1 to 6.5 reward to risk ratio. You have 6.5 risks for every reward you can make. That is not a good trade. Probabilities may be on your side. It is an awful trade. The bull put is going to go through volatility spikes for the end game. The bull put will go through volatility spikes for an earnings report. The credit spread for Disney is an awful opportunity, even if it does have a 74, 78% probability. Obviously, someone doesn't understand Greeks on that one. It is an awful opportunity trade, even though the probabilities show it. It's an awful risk to reward trade. It does not understand volatility, and it will be extremely hard for the trade to be profitable until after volatility crush, which is May 8th estimated for their earnings right now, I believe. So if you can get out of it with a dime, get out of your trade if you chose a bull put. I'm going to tell you, credit spreads, in all honesty, every time I hear someone tell me, I want to get paid to play. You know what an experienced, profitable trader thinks when they hear that? Amateur hour. Amateur hour has no concept of how the markets work. Volatility, Greeks, time decay. Has no concept of how to make real money in the stock market. Amateur hour. That is the biggest amateur comment I've ever heard. I want to get paid to get played in the market. Really? I want to be profitable in the market. I don't care if I pay through the nose. I don't care if I get paid. I want to be profitable in the market. Big difference. Big difference between a professional or an expert trader and the amateur. I'm rubbed a little raw today in some of the conversations that I've had. I'm glad to see we're up to 16 people here today. And I will put a disclaimer as I post this. But let this be a real life education on the fact that if you're in your position for 1 day and 2.5, 3 hours, and you're already worried about the trade on flat movement on your stock, I would love to talk to you to be able to trade your money. You are not mentally prepared or ready or should be in the stock market. And the crash that we're going to have will make today's volatility look like nothing. The risk our stock market has in the future, because of all the quantitative easing and the band-aids that were put on the stock market, the risks that we have globally right now, I would worry that maybe you don't have the mental strength to take care of your money or yourself when that was to happen. We need to talk. We need to show you a better way to trade. We need to help you as a professional protect your money. The money you're trading in days like today, it should be, as horrible as it is to say, it should be money that if you were to lose won't risk your lifestyle. This account was a $27,500. I've taken, what have I taken? I've taken $4,000 out for my first tax payment for the quarter, and I think I just took out $2,500, maybe $3,300 to go buy cattle. But $27,500 up $10,959. That's got to be a pretty good return. Yes, I would hate to lose this, but with that said, 10,929 divided by 27,500, that's a 39.74% return. IRA accounts are not that way. I'm not trading my IRA account to a 39.74% return, but I'm not trading it to that level because I'm not willing to risk $250,000. It's an IRA account. I'm not willing to be so gung-ho like I might be in a speculative trading environment like I'm in right now with these positions. I'm not willing to let it ride on some positions like Facebook, which was really a pain in the butt last year. This is my speculative trading. This is my $27,500 that I'm going to have to go pay in the sale of a home here in September when I've got to pay my taxes. And so I'm trying to make some money with it along the way. I would close this down if I got down to 27,500. If I probably got down to 22,500, I'd have to close this down. I'd close it down so I'd only have to come up with $5,000 to pay the taxes that are going to be due on the sale of my house. I raise some Angus cows. We buy them here in a week and we run them out till the beginning of November and we slaughter them off. I need $3,300 to go buy the cows. My family has 3 cows. One to pay for the land and the meat. One that we pay off in thirds to recoup the $3,300. And the one that we pay for the land, about half goes to land, and the other half we sell off to pay for grain and butchering and that kind of stuff. I've had a pretty good year. I take the money and I reward myself. Didn't reward myself in paying my quarterly taxes, but I did reward myself with taking care of the cattle and the fun that we have with that in my family. This is real life. And I hope for some of you, for the first time, you might be a little offended. You might be a little worried. But I'm not selling you an education. I'm not selling you a pipe dream. I'm telling you how it is in the real world and giving you the opportunity to follow me and to glean some information from me along the way. I do hope this was helpful. Any questions that you guys have? A comment that I missed: the worse the market gets, the more you'll get rubbed raw by those who don't get it. People should assess their tolerance levels before investing. Very well said. Very well said. Kevin, so would you change anything on Disney? Oh my gosh. I'm going to say this very candidly. Of course not. Were you not listening? The notes tell you there's nothing that needs to be traded or changed on Disney right now. There's no crossovers. It's flat. We have a movie coming up that may sell $1 billion its first weekend out, which should, in theory, bump up the price of Disney. Of course, I'm not doing anything with Disney. Were you not paying attention? There is no reason to do anything with Disney 1 day, 3 hours after you've placed a trade. You're killing me. You're absolutely killing me. But you know what? This is the growth of trading that I think people need to go through. With all due respect, I would much rather have someone like myself maybe hurt your feelings just a little bit than have the market hurt your feelings to the tunes of tens of thousands, if not hundreds of thousands of dollars. Guys, it might be a quick one today. I feel I'm going to end this right now. I'm going to end this right now so that I don't say anything that becomes inappropriate. But I do hope this was helpful for you. And with all due respect, David, if this is rubbing you the wrong way, you've got two choices. You actually got three. You can either give us a call and let us do it for you. You can easily stop doing what you're doing to give yourself the break and the release from the pressure, or you can keep doing what you're doing until you're out of money. That is being brutally honest, and you'll never hear that from education. They'll pipe you up with, oh, you can do it, you're good to go. They don't know your risk tolerance. They don't know your money situation. In real life, have a professional do it. Stop doing it so you don't put yourself through this worry. Or last but not least, go ahead and end up losing all your money, and you're going to have to deal with the consequences at that time. But you are not ready to be trading real money in the stock market in any way, shape, or form. Guys, I will look forward to talking to you on Monday. I do hope this was helpful. I don't dislike anyone that's here. I'm not trying to be rude or hurt someone's feelings. I'm doing the best I can to protect your money so that you don't have to possibly explain to a spouse or a kid or to yourself how it disappeared on you so quickly. Guys, have a great day. Appreciate the comments. Please use this as a learning experience. Please use this as an example of someone that probably should have said this to some of you a while ago. And hopefully it'll build my credibility in Hurley Investments that you have someone that you know will not blow smoke up your skirts, but will actually tell you how it is in the real world. Guys, have a good day. I will look forward to talking to you on Monday. I do look forward to getting a couple calls and hopefully we can rearrange the way portfolios are going. It is 5 o'clock somewhere. But unfortunately it's only like 10:30 my time. So guys, you have a good weekend. Talk to you later. Bye.